If you own your own business, the infinite banking concept can definitely help cover expenses in your business. And that's what we're going to talk about on this episode of Wealth Talks. So let's get started.
A lot of business owners want to use the infinite banking concept to fund the business expenses for the intrinsic benefits. We're going to talk about those benefits and also the process of using infinite banking for business. There are a few things that you want to get right to make sure that you get all the benefits and have no problems.
The benefits include tax benefits, time savings, increased profit, more productivity, cost savings, flexibility for loan repayments, better cash flow, and peace of mind.
A real-life example of a business owner that's using the infinite banking concept would be a doctor that takes a $50,000 policy loan to go buy a digital x-ray unit.
We actually have an example of that, where a doctor takes a loan from his policy instead of leasing that equipment to own, and then he just pays back the insurance company what he would have paid in that lease-to-own agreement. And over the next 4 years, he has the $50,000 back that he would have paid to the leasing company. He has $5,270 of the interest that would have gone to the lease. And he's got his x-ray still yet.
If he would lease to own this x-ray equipment, his monthly payment over 4 years would be $1,151 a month. And so that's going to add up to be that $5,000 of interest. But so why is it worthwhile for him to do that? Because he pays $5,000 worth of interest. He could pay that to the leasing company as well as he leases to buy this piece of equipment. What makes it worthwhile for him to use the infinite banking concept for this loan?
Well, it's because he has his cake and eats it too. He's got his x-ray and he's got the $50,000 back after 4 years, and he gets the $5,270 tax deduction because that interest is interest that is recognized by the IRS as a legitimate business expense.
Nelson Nash gives an example of how a business owner uses life insurance and the infinite banking concept together in his book, Becoming Your Own Banker. And he used the example of a logger who was purchasing log trucks. When you read that book, it makes you wish that you were in the logging business. But you don't have to be in the logging business, nor do you have to be a doctor needing x-ray equipment to make the infinite banking concept work for you.
The cool thing about this doctor is when he bought his x-ray equipment, not only does he get to recover the money that he paid for the equipment over time because he had a source of capital to get that from, but he also has the growth in the policy. What did the policy grow by during the time that he was buying that piece of x-ray equipment? That is money that is in his pocket that he would not have had if he just leased from the bank.
And in this specific example, his cash value grew by almost $8,000 more than what he paid in premiums over that 4 years he had that loan out, which more than covered the cost of the interest, even if he didn't have a tax deduction with that $5,270 of interest.
So he got a tax deduction on the $5,270 of interest, and he had $8,000 more in the policy. That's a great deal.
Nelson's example of log trucks is a great example because it shows as that money comes back, the cost of the log truck coming back into the life insurance policy, it gives them the opportunity to replace equipment that is wearing out. And everyone that's in business knows that equipment doesn't last forever. And so you either do a sinking fund method where you just stock away money in a savings account and then spend it all down and earn nothing while you spend that down but just have to replace it, or you use the life insurance fund as your sinking fund. And then when you purchase the equipment, the money that you've leveraged to make that purchase keeps growing for you, and you get that $8,000 like we're talking about on this x-ray equipment, in addition to getting the money back so that you can finance another piece of equipment.
And this is a benefit for the business owner specifically because most of the time, the business owner wants to own the life insurance personally. So the business isn't seeing that profit from the increase in the life insurance policy. All the business sees is that the business paid $5,270 of interest. Instead of paying it to the bank, they paid it to the business owner. That's a tax deduction for the business any way that you look at it. Now, that interest, that $5,270, it is interest income to the business owner on the personal side. But because he took the policy loan from the life insurance company, that deduction can be offset because he borrowed from the life insurance for a business purpose. So he gets a tax deduction there too. So he has interest income on the one hand, but he has a tax deduction for that interest on the other hand. And so he got money out of his business without paying payroll tax on it, kind of like taking a distribution. He got to put that back into his personal life insurance and got the profit in the life insurance at the same time.
And that's important. You mentioned that this is personally owned life insurance because if it's owned by the corporation or the business, it's subject to judgments that would be passed against the business or the corporation. We don't want that to be an asset in the corporation or the business because it's kind of out there in the front of the public where if there's a judgment that's passed against that, then that's going to be a judgment lien is going to be attached to it.
Typically, there is better asset protection when life insurance is owned personally.
Business owners are asking us, should I pay premiums out of my personal account or out of my business account? And what we've just discussed here is reason to pay it out of the personal account so the policy is personally owned. Also, you want to make sure you're paying it with after-tax dollars so that all the growth in the policy and any access to cash values, such as taking a loan, is a non-taxable event. And you want your money increasing in value without having to pay taxes on it later.
Something the infinite banking concept gives to business owners is it gives them a place to save money that can also still be used in business. So they're saving money personally for their retirement, for other life events, but this can also be used in business. So many places that people save money today, they're putting their money in jail. They can't get to it for a lot of business purposes. Business owners that do put their money in life insurance where they can still access it, when a good deal comes along, they could pay cash and negotiate a better price on good opportunities. A good example of this is my brothers, Ben and Jesse, when they wanted to expand their metal fabrication business, and they found a machine shop for sale and all the equipment in it at a wonderfully good price. They were able to come in and make a cash deal and get that money without having to wait on the loan process from a bank.
So here they're not loggers, they're not doctors, but they found a way to use infinite banking in their business. And if you want to hear more about that, it's episode 464, where we had one of them in the studio talking with us, telling us about their experience in using the infinite banking concept for their equipment acquisition in their business.
I can just hear Nelson Nash talking in his seminars about his associate who was in a tight spot financially, and he gave him an offer to buy some land at a ridiculously low price. And Nelson said in his beautiful Southern drawl, "Hold real still, I'll be right back." And he went out and he borrowed from his life insurance and paid cash. And that doesn't happen for people that have their money tied up in mutual funds or stocks or have to go and get underwritten at a bank, because that good deal could pass them right by.
What if you don't have an X-ray unit to finance? What if you don't have a log truck to finance? What if you don't know of any good deals that are coming up that are on the horizon for your business? Does this mean you cannot use infinite banking concept in your business? Of course not. You can save the money now in your life insurance policy so that you are ready when those deals come along. You might have tractors that you need to finance in your business. You don't need to finance those every day, but if you have the capital to finance one when it comes along, you're in a better position. You might need to finance software programs from time to time. Something a lot of businesses need to finance is commercial insurance.
You know, our friend Ricky Hurd, who was also in the infinite banking concept, but primarily he did P&C insurance. So he provided insurance coverage for commercial fleets, commercial equipment, commercial office buildings. And when he would explain how the infinite banking concept could help these corporate owners purchase life insurance by borrowing from their life insurance and then paying the premiums back to their life insurance as if they were paying their P&C insurance premiums, the light bulbs just came on. He said it wasn't a sell anymore to try to get people to do it, because they realized they were going to get their coverage for their commercial fleet, their buildings, really for free, because the money that they now would have paid to the commercial insurance companies was coming back to them to be able to use over again. And during that process, they were still earning compounding growth on the money that they had leveraged to pay their premiums with for the commercial insurance.
A commercial business has to carry insurance. Commercial auto insurance tends to be very expensive. It's not unusual to see premiums of $20,000 a year. Now, you could pay those premiums throughout the year, but if you do that, you're probably going to pay a higher rate than if you pay it all at one time in advance. So if you have a source of savings through the infinite banking concept where you can go borrow $20,000, pay your premium up front, now throughout the year, you can repay that policy loan. You get the same type of long-term benefits from the life insurance policy on the personal side. But then next year when your commercial insurance comes around for renewal again, you have the money to pay the next year's premium. And so you can keep that cycle going. People have even used this type of model to pay taxes because they get the money coming back throughout the year. Most of the time it's there in the policy. And then when tax season comes due, they have the money ready.
We wrote about this in Prescription for Wealth years ago, where Warren Buffett sometimes chooses not to pay his tax bill and just pay the interest on it, because to liquidate an investment that's making 15 to 20%, he only has to pay 6% on the tax bill. So why liquidate a profitable investment when he can just pay 6% instead of losing 20%? And that doesn't mean he doesn't pay his taxes. It just means that it's a cash flow management system. And that's really important in any business. Cash flow is king. We've all heard that. So it's important that we understand that the infinite banking concept is not an investment. It's a process. And the product that we use with it is the whole life insurance to store our capital so it's readily available, liquid when we need it, and helps us get over the cash flow crunches that happen in any business.
As you can see, the infinite banking concept is a great tool for business owners to use. You want to get things set up right so that you get to enjoy all the benefits without any of the problems. And we're going to cover these things right after the break.
Ken is a client of McPhee Insurance. In 2008, he lost about half of his investments. That was before he was a client, but he had been following conventional financial wisdom to a T. Many people don't put enough money away for their retirement, but Ken did put money away for his retirement. He says the most frustrating thing when 2008 came along, he had been putting money away for 35 years, and it hadn't grown to what he expected it should have. Then 2008 came along, and it took half of it away. He really felt like he was backpedaling instead of making progress the way he should. That's when Ken discovered using life insurance as a financial tool with the infinite banking concept. He says not only does it give him more stability with his finances, but it puts him back in control instead of giving control to somebody else. Many people find out about using life insurance as a financial tool during an economic downturn or a market crash. And while it's good they're getting the coverage they need, we really wish we could turn the clock back for these people so they could have the good life insurance in place before the economic downturn or the market crash. Because good life insurance helps you to keep more of the money that you make, grow your wealth, and have financial peace of mind even during turbulent economic times. To get the good life insurance you need, call McPhee Insurance at 702-660-7000. Call us sooner than later.
If you want your business to borrow from you personally, there are some documents that you'll want to have in place, including a promissory note, corporate minutes, and a waiver of notice of special meeting, as well as amortization schedules.
And John, you've created a resource for this on moneytools.net.
This is going to sound like an infomercial when I tell you you can get it all for free, but it's true. You can get it for free, all the document templates on moneytools.net, and 3 amortization schedules. As you need more amortization schedules, you can upgrade your account.
John, you said if you want to borrow from yourself personally, I thought we were borrowing from the life insurance company. I think we need to explain that a little bit more.
So there's 2 loans involved when you're taking a policy loan to use for a business purpose. There's going to be a loan between you and your business, and there's going to be a loan between you and the insurance company. Both of those loans need to be tracked if you're going to take the appropriate tax deductions that you can take. And on the business side, when your business borrows from you personally, you want to make that an arm's length transaction so that you're not commingling personal and business funds. You need to document that the corporation made this decision to borrow the money. And that's the purpose for the corporate minutes and the waiver of notice of special meeting. So you hold a special company meeting, you decide to borrow this money from yourself personally, and then you document that with a promissory note and the amortization schedules.
This is really no different than borrowing money from a bank or any other money lender. It's just that now you are the person that is making the loan. So you have to have a way of documenting that if you're ever audited by the IRS.
Something that's really cool about taking these loans too is when you're the business owner, it puts you in the driver's seat of deciding how you're going to repay the loan. So let's say you take a $200,000 loan to go buy some new equipment for your business. But it takes a while after you put that equipment in service before you start seeing increased cash flow from that equipment. Maybe it takes 6 months or a year. What options do you have to make this comfortable and affordable for your business? With a bank, you'd probably need to start making payments pretty quickly.
Oh, you
need
would.
to have that savings available. But taking a personal loan, through your life insurance, all you have to pay the life insurance policy is the interest on the loan. So if you have that covered for the first 6 months or the first year, that gives your business flexibility on how to pay it back. You can have the business pay interest back on the policy loan for the first 6 months of the first year, or you could defer payments altogether if you have enough reserve in the life insurance policy to allow the business to take its time and defer those payments while that cash flow is building.
And that's one of the things I love about Money Tools is when you're creating the amortization chart, you can plan for that. You could plan to do interest only for maybe the first 6 months or first year. Or maybe you think that you're going to be able to make loan repayments right away and you start into them and find out, this month I'm short. Well, you can just change what you're paying. You have that flexibility. And when you record that payment that's different than what the set payment was, it automatically refigures all your future payments. So it's easy to change what you're paying back, whether you 1 month decide to increase the amount or you need to decrease it. You have that flexibility, and in your software, you have the flexibility in the system that is managing what you're doing.
That's true. It allows you to document that whole process because when you skip a payment, that changes the amount of interest that is due. You're adding interest to the loan balance when you can't just tack the payment on the end because there's going to be some additional interest that goes with that. So by using the flexible schedule, it tracks it all for you. And as you make those changes along the way, you have an up-to-date record of that.
Nelson Nash used to say, and he's absolutely right, that you finance everything you purchase in life. You either give up interest that you pay to someone else for using their money, or you lose the interest that you would have earned on your money when you spend it. Recently, Michelle, you were talking about Natalie and how she was spending money on a debt that she was struggling with, and she thought she needed to build up a reservoir in her policy before she could ever start using the infinite banking concept.
Natalie is a real estate investor, and she was looking at the policy she was going to purchase, and she wanted $50,000 for her real estate investment. That's what she thought she would need. But she noticed it wasn't in the policy that she was going to purchase until year 5. And so she thought, can't really use this policy until year 5. And I said, well, you have this credit card debt that you're paying how much on? It was somewhere over 20%. And when she realized that she could get 4, 5, 6,000, whatever it was in the first year in her cash value as a loan, and pay off some of that debt, and she saw immediately that she could actually start saving money and have better cash flow and be in a much better position even before that 5 years when she had that $50,000 available to her. So this gives flexibility for a lot of different business opportunities and for increasing your cash flow.
That's such a powerful example, Michelle, because A lot of people just see, oh, I've got this big expense or this big debt that I need to take care of. They don't see the incremental steps that it takes to overcome that debt or to get to the point where they can make that big purchase. And the life insurance allows us to do that because the capital that we're going to leverage keeps growing even as we're building toward that major goal. And that's the beauty about the infinite banking concept.
A lot of people think you have to have $50,000 or $200,000 built up before you can really use this for business, or whatever amount it is. It doesn't really matter. But the beautiful thing is that you can start small, even before you're a business owner. You don't have to be a business owner to start thinking like a business owner and preparing the funds that you will need as a business owner for financing equipment and other things along the way.
Sometimes people are so close to the trees that they don't see the forest, or is it the other way around? They're so close to the forest that they don't see the trees. And so we like to help people understand how they can use their imagination to make the infinite banking concept work in their situation.
After listening to this podcast, you know why business owners love using the infinite banking concept. If you're a business owner or if you're starting a business, you can do this too.
If you are using the infinite banking concept with your business, make sure that you get all the paperwork that you need properly documented so that you can enjoy all the benefits and none of the problems. Get the documentation software you need at moneytools.net.
And come back next week for an interesting comparison. Those life insurance policy offers you get in the mail, we're going to compare them to the life insurance that we sell. We'll do the research on that this week and share it with you next week right here on Wealth Talk.